Right, we're now going to look at trend lines and moving averages. It's good practice and something I'd recommend that every day before you trade, or the night before if you prefer, you start looking at the major trend lines. Now, most software packages, in this case I'm using something called 10.4. I've used 10.4 for a long time. I'm now switching to Updater, which I think is a better package. But having used 10.4 for so long, I'm more familiar with how to draw these things, and therefore it's easier for me to do so. You normally just pick 2 points for a trend line, so there's one, and then you can swivel it around to see whether something actually works. Now you'll see that that is not a bad line. You've got, obviously, we've got the 2 points we got the 2 points we used. The trend line always has to have 2 points to be drawn. Those two, but you can see that you know, there's a fail break there. There's pretty close there. Pretty close there. Pretty close here. You know, that trend line is a pretty good line. If you'd used that to buy whenever the market got within a certain closeness to it, you'd have gone long here, you'd have gone long here, and you'd have gone long here, and all of these are very solid moves. Now you'll also see that around here the line has been broken, but it has proven to be resistance as well. I mean, the market here has been bouncing off the trend line. Okay, it's then gone through it. It's seen a failed retest of these prior lows. It's come back down again, gone through it again, and you know, this is a useful tool. Now I'll draw another line on the chart. So we'll put one at the top, so a sort of trend channel. Often with, I mean, what I'm trying to get is get a parallel trend channel. That's about right. And you'll see that the parallel trend channel has pretty much captured the whole move. Okay, there was a small penetration here, a failure if you like, and then it came down again. But you know, otherwise it's pretty much kept the market under control. I mean, the market doesn't have to be bounded by such things, but it often chooses to be, for, I guess, because a lot of people use trend lines. I mean, that's pretty what it is. So a lot of people use trend lines, and so a lot of people sell when the market gets close to them. Also, you could say the market becomes overextended. I mean, that's a fairly steep line. It's been in place now for over 4 years. It's in its 5th year, in fact, at this point, and it's you know, it's clearly a useful technique to use. Now, when you're looking at very long-term charts, it's sometimes more useful to look, rather than at a linear scale, at a logarithmic scale. So we'll just switch to logarithmic. The reason that logarithmic is can be more useful is because in the very long time scale, a logarithmic chart will show if the market doubles, it'll take up the same space on the chart. So on a normal linear chart, a move from 100 to 200 may look insignificant if you got a move from, say, 5,000 to 10,000. I mean, you just won't notice it. It will just be an irrelevant blip on the chart. With a logarithmic chart, you're actually seeing the percentage moves, and they're given equal weighting. So you'll notice that the trend lines I have drawn now look a bit wonky, although not actually, interestingly, in some ways it's almost better. It's kind of bizarre, but you know, you've got a closer linkage there, and this thing here is pretty much, you know, it's just stuck on like a limpet, I guess. Has been tracing this lower line, and then come down again. So it's trying now to rally up again, failed, come down again. Interesting. I mean, the lines getting closer together. You may also notice that because of the logarithmic scale, purely because at this point down here, the percentage gap is bigger than it is up here. Right, now we'll just clear these lines off the chart, and we'll draw some more lines on the logarithmic scale. Okay, so go back to trend lines, new. Okay, so we'll pick the same point there, and it's a similar sort of pattern. We'll put the trend channel in place. Which is, yeah, that's about right. So again, we have a slightly different picture here, perhaps a more relevant picture, in that, you know, we see this very, very tight trend range here, very well documented. Well, of course, we use that as a point, so well documented there. Another very good documentation there. We're seeing a bit of a failure here, since it's not getting up to the top of the line again. Broken down through it, tries to rally but fails, down again. Yeah, I mean, it's not looking so good from this chart on FTSE at the moment. Yeah, there is some doubt as well. I mean, we have of course got major failed retest here at the moment. Yeah, and it is Christmas time. I'm recording this late in November 2007. The Christmas rally may come in. Could just plot us back above that line. So this is a technique I recommend you doing every day, just to see what's going on. I mean, you know, these software packages, Updata or 10.4 or eSignal, will allow you to record your trend lines. You haven't got to draw them every day, and obviously on a weekly chart you wouldn't want to draw them every day. But we're now going to scale down. We're now going to look at a daily chart. So yeah, we looked at the weekly. We've got an idea what's going on. Now we're going to the daily chart to see what is showing on that. Okay, this is not such a long-term chart. We'll expand it slightly so we can expand the scale. Obviously on the daily chart, more interested in the daily trends. I think the first thing to do is put up a 200-day moving average on this chart. So we go to indicators, new indicator, moving average, 200-day. Yeah, the 200-day moving average is widely followed, and just condense the chart a bit. You'll see that again, a lot of buying came in here on a penetration below the chart. Having gone through it here, tried to break through but failed there. Okay, here it's gone through clearly, but it's come down again. We got this failure here on the break, and now we're trying to rally again. This line is clearly important for FTSE. So the current rally, which we'll know all about by the time you listen to this, has key resistance around 6,400, just above 6. So it's been about 6,420 for a while now. But we have this very solid spike low here, and we have a reasonably solid spike low there on the daily chart. Okay, so we'll just get rid of those scrolls. Now trend lines. Yeah, I don't see anything there particularly interesting at the moment. I mean, we go back a bit further. You know, we make the chart a bit bigger, then we will see a trend line, but it'll basically be the same one we've been using before. So there might be too much there to. There shouldn't be too much new information from that. We'll just give it a go. Well, this is, I mean, it's quite a useful little line, but again, this is very similar. You know, we've got the two lows we used to draw the line. Those two. We've got good test of it there, clear break of it. Then notice how the market falls straight down to the line, and then starts to congest around the line before falling further. You know, that's indicative that this is an important level for the market. Similarly on the way up, it tries to get above it there, fails, goes down, fails again there, goes up. Then we get a retest of the line, and then it goes up again. So I'll try and expand this a little bit. It's quite interesting how these things do work. That disappeared. Okay. but if you look hard, you can see that you get this the line acting as both support and resistance a number of times. In fact, I mean, even here it's support, or at least the two lines, the 200-day moving average and the trend line, are working in harmony. Then you get a break down below it, and then you've got this retest there of the line, fails, down we go again. Okay, so we'll go back. We'll now scale down a bit more, going to the hourly chart to see what this may show us. I don't think a trend line is particularly useful there, but we have got this spike low there. This is the hourly chart. It doesn't look quite so dynamic, but it's still a fairly reasonable spike. I mean, that's probably a gap. Well, there's a gap open there, isn't there? I mean, the Elliott patterns here, if I was saying, is this a major low? Well, I mean, we've got maybe a 1, maybe a 1, 2, and a 1, 2, 3. I would say it's not very clear at the moment. ABC. I mean, that looks more like an ABC. But to count this as a 5 is a bit more difficult. But we have bounced here a bit. Okay, so if we keep going down, so we now get down to. By the way, I should mention, as we now that we're on the hourly chart, this is now the 200 hourly moving average. So these indicators will change as you change the chart. Well, what we've chosen is a 200 unit moving average, and how long a unit is depends on the chart. You'll see that in the corner here it says hourly at this point. But we'll continue to scale down. I think this is a useful exercise in itself. So we're now on a 30-minute chart, which probably won't look very different. I mean, the 30-minute chart is only half the hourly chart. It's not a significantly different chart. Although, of course, we have lost information from the chart. We're now seeing this peak here a bit more radically. We've got a clear ABC here. We then got another ABC here. So it looks like that may be A. This may be a B, and this could be a C wave decline we're seeing here. There is more of a 5 here. 1, 2, 3, 4, 5. So that could be a C. In which case we've seen a complete corrective move, and in which case we could now see a very strong rally. The only caveat there is that ABC moves sometimes are just the first A wave of a bigger ABC. There always are these other interpretations. There's never something which is 100% certain. I mean, certainly having seen a C here, I'm not saying it's easy to identify, but having seen that low, and if it is identifying it as a C, we know either to expect the strong impulsive action or to expect sort of ABC type move. I mean, it does look like we're at some kind of peak here, just because we seem to have seen all we need by this rally. I mean, this rally does look like a 5, in fact. So we may have seen wave A here or wave 1. We don't know which at this point. Doesn't matter too much, in fact, because whichever it is, we should see this pullback. So there's a shorting opportunity, and then they should see another rally. So it still gives us trading opportunities, whatever we see. We'll now go down again. This will be the 10-minute chart. So at this point, we're going to start seeing much shorter term action. So that rally I've just been talking about should now become a bit clearer. In fact, we will expand the data so that we got it even clearer still. So before I do that, this is the C wave I was talking about. And I say that there is a spike. There's a spike there. So we saw a spike on the 22nd. It wasn't a very clear day. In fact, I think we did discuss the 22nd. But we have got this, and also got a failed break, so that we've got a buy signal there. Often, these things are, if you're there to see them, they're fairly clear to see. I mean, this one came in at around 10ish, I would say. That may not be the time you're around to watch these things. Let's just see what time it was, in fact. but clearly, no, so it was 9 o'clock. 9 o'clock. So fairly early in the day on this. It's a 10-minute chart. Now let's look at this rally in some detail. See what we can count. Okay, there's a fairly clear 1, 2, 3. No, that's no good. Let's start again. So sometimes these things just aren't terribly clear. So it's like 1, right? 1, 2, 3, 4, 5. That's 1. Then we get this sort of rather feeble thing here. We call that 2. Now I get a bit of a spurt here. So we've got different kinds of 5 in fact, but I think we call that 3. So we've got another feeble decline, that's a 4. And there's sort of like a 1, 2, 3, 4. Maybe a little bit more upside due just to make it into a 5. So okay, that's those 3, 4, and 1, 2, 3, 4, 5. There could be more upside to come there. It's not totally clear. Okay, if when we open on the 26th we see, say, a new high, so let's say we get a bar like that. So the open will be where the close was. So that's the open. We see a high here. I think that's just about on the moving average, isn't it? So on the 200-day moving average. So we have a potential sell signal developing for next week on Monday. If we see an early rally and it quickly fails, then that would be a sell signal. See, this sort of research is invaluable. If you do this at night or you do this in the morning, it sets you up for the day. You'll know where the key areas are. You'll know what to look for, and you can start to think about which bets you want to take. I mean, if we saw the sort of action up here, then I mean, it may not go very high up. So by the time you get the signal, it may be back to parity. So the down bets are going to be not cheap. I mean, they won't be expensive, but they'll be neutral because there's a parity. So you may want to look at the bet, say, down 50, or the FTSE low to be less than minus 100. But if you do that, that kind of research doesn't even take too long. This recording is 18 minutes now. That's not a huge amount of time. It's interesting work. Good idea to write down your conclusions, write down what you're thinking of. The mere exercise of writing something down forces you to be logical. If you don't write something down, it's very easy, I find, for my thoughts to become totally illogical. And it's only when I come to write them down that I realise that that's the case. In a way, that may be why I do quite a lot of writing, and I think I find it just really helps to organise your thoughts. So I would encourage you to do that. Right, well, I think it's been a useful exercise. I hope you enjoyed that. Thank you.